everyday people shouldn't have to have a degree in finance in order to beat inflation, and that's what a lot of people,
there it is,
have to do. Yeah, exactly. But what's really tragic, I think, is us wage earners are conditioned to the fact, conditioned to believe that our home is our most prized possession. And through these really tumultuous times whereby, interest rates are starting to rise and people are over-indebted, what's really tragic is that you will try and protect that home at all costs. Yeah. Yeah.
So, Mr. Daz Bea, let's just get into it. So I met you.
Hook in.
You reminded me how cool online communities are, because when I started sort of learning affiliate marketing and doing all that kind of side hustly stuff almost 10 years ago now, I felt like I met the best friends straight away, just because everyone's got this thing in common, and Bitcoin is exactly the same. And I feel like when you and I connected through the Bitcoin Live team ahead of the event, shout out to those guys, Australia's first Bitcoin only conference. If you're anywhere near Australia within traveling distance, make sure you get your bum there next year, because it was so great. And then so we connected to do a panel, spoke on the phone or spoke on Zoom or Google Meet or something not long after we got introduced, and it was just like, oh, I've known you for years. It was great. And that's what I feel like this community is like. We're a bit of a cult, but a great one. So the reason I wanted to talk to you, you are the first person I've interviewed for this podcast with zero prep, which feels really great. I'm kind of just going left field. I'm not going to prepare, because the conversations we've had have been so kind of like a perfect example to me of, middle class, working guy, family man, you're a tradie, just doing everything you can to be a good stand-up citizen who's providing for his family, and then you get onto Bitcoin and you get fired up about all the things that make it amazing. And I feel like that's a really good conversation to have. So before we go back to you being a tradie and all the rest of it, because there's things that I want you to explain to me that I think the average person just doesn't understand anyway in relation to Bitcoin, but also just in relation to life. But tell me how you came to Bitcoin, because everyone's got their story, and kind of you're based in Australia. You live up in Cairns, which is right at the top end of the country for anyone who doesn't know. Tell me how you got to Bitcoin and when, and what that journey's been.
It's a long story. I'll try and make it as succinct as possible, but appreciate the words, appreciate the thoughts, and appreciate you having me on for a start. But I came to Bitcoin from a bit of a hustling investment type of lens, and I'll go back to my early 20s. I was in sales all my life, and sort of got to a point where I realized my base wage salary wasn't going to cut it if I wanted to bring little humans into the world. And really where I started to look at my life, look at my income, look at what I could do to hustle. And coming from a working class family, I haven't come from capital. So one thing I learned quickly is I had lots of really what I thought were cool ideas, but lack of capital to execute anything. So that was really something I wanted to change in my life. And one way to do that in Australia is to go through a trade. So that's, tradies make good wage, typically in this country. So I always wanted to be a sparky, and at the ripe old age of 29, I decided that's what I was going to do. So I complete career shift, took
late bloomer.
I took 3 years. I was a late bloomer, and so I did a lot of research on what I could do, and it was around that time that we were starting to think about family, wife and I, so to bring kids into the world. So I knew I could only do it at the public utility, because apprentices get paid shithouse in Australia. So I knew what I needed to earn to at least try and keep bread on the table. And it took me 3 years of hustling to get in as a tradie, because I was older. I come from a sales background. They looked at my resume. I didn't really apply myself in high school. I scored bad grades, so they're looking at my resume and going, "This guy's not a good fit for a tradie." Um, so it was one of those things, just
So
tenacity
that
and
makes you a
just
perfect
keep
fit
turning
for
up.
trading.
Well, not from Sparky's perspective. So you need to have a certain level of math and physics before they
Yeah.
let you through for being a Sparky. Otherwise, you
Hmm.
quickly zap yourself and you don't survive very long. So
Yeah.
that's generally the way things go. But it's one of those things, just being a pain in the arse. Like, just keep rocking up, right? And they eventually say, "I'm sick of interviewing this guy. Just give him a shot." So but
Love it.
to to help myself, I took on some study as well. So I was doing an advanced diploma through sorry, an associate degree it was through USQ, as it's like basically like its first 2 years of a 4-year uni degree in engineering. So I did that to try and make myself more attractive, and at the end of the day, that's kind of what
Hmm.
got me over the line. Fast forward, I ended up doing my
Just
trade 4
quickly,
years. Yeah, sure.
I think we've got a bit of a delay, but that'd be right. It's bearable. So you were studying to become a Sparky at uni. Was that around a job? Because I'm assuming you had to keep working and earning money whilst you were studying. Is this what you mean? Was
Yeah, I worked full time as a cigarette salesman. Have you ever
Oh
seen that
God.
movie, Thank You for
Okay.
Smoking? I was like that guy, but less
Yes.
cool.
Wow. Okay, continue. So fast forward, you become a Sparky, go into the
Come a
industry full
Sparky.
time.
I have to move. Around that time, there was a lot of political movement because we're a Queensland-owned utility. So there was no jobs, basically. So I had to pack up my little
Right.
family and move down to Mackay. And it was in
Oof.
Mackay on single wage, two young kids. Youngest one was 3 months, and started struggling a little bit as far as because I wasn't a tradie anymore. I was earning a wage in an office. So I was employed more on my engineering degree background, not so much hands-on tools, right? And was
Okay.
struggling a little bit, and I read a book called The Barefoot Investor. So it's a bit of an Aussie classic in sort of middle class
Yeah.
circles. And one of the outcomes, one of the things he talks about in that book was a side hustle. So trying to leverage off your skills and become a freelancer. So I was kind of like, well, what could I do? I had to go and get a contractor's ticket if I wanted to be a Sparky, sort of outside of work, which involved a little bit more study, a little bit more fees, and all that sort of thing. And I've been playing guitar since I was 8 years old, so I thought, look, new town, I'll grow a beard, I'll go out and start hustling and start doing some busking and some gigs, and if I'm shit, I'll just shave it and walk away, and nobody knows me. So that was the sort of the rationale behind it, and I started, lo and behold, getting a pretty good name for myself locally, and was doing upwards of 3 gigs a sort of weekend, and earning really good
Wow.
side hustle cash. And then I'm like, okay, what do I do with this cash now? And I was at a bit of a fork in the road in my uni career, so I'd ended up doing a little bit more study, and I was at this fork in the road whereby I was like, do I continue doing? I was used to doing 20 hours of study a week for this degree on top of working, and sort of balancing the family. Hat tilt to our wifey who kept it all running. And I was like, well, I can either finish my degree and or I can put that study into like putting this extra money that I'm going put that to work. So I made a promise to myself that I would learn how to invest. So I spent that 20 hours a week. Instead of reading engineering books, I decided I was going to read investing books. So I promised myself I would do 12 months before I invested a single penny, a single dollar. So I did that.
That's discipline.
Yeah, well, it was one of those things. I had enough knowledge around investing to know if you don't do it well, you'll really fuck it up for yourself. So, I, I hope you don't mind me swearing on your pod, by the way, but you'll get that.
All for
That's
it.
what I do.
It's
So,
passion.
yeah, cool. So I did that. I threw, 12 months worth of investing sort of at it, and then I had all of these. I had spreadsheets worth of, so I understood how to do discounted cash flow analysis by the end of that. and I had all these spreadsheets with Google Finance tickers coming in, and I had the whole ASX 200 on this spreadsheet with all the tickers coming in to try and find what was good value in that. So I come from the sort of Warren Buffett value investing mindset, whereby you try and identify good companies with decent balance sheets, decent moats for a cheap price.
I'm
They're
pulling
just cheap,
faces,
you know.
just as a disclaimer. I'm pulling faces because hat off to you. You're hustling. You've got your why. You've got your reason. But I'm pulling faces because it's just like, it just sounds like so much work. Like, this is a side hustle.
There's a lot of work.
In something, like, it wasn't a passion project. You weren't doing something because you loved it. It was something you felt compelled to, that you had to do to make enough money to support a young family. It sounds batshit boring to me. But, like, I'm just cross-reference or cutting in at this point, because it's like, no human being should have to put that amount of time and energy into something that they don't genuinely love, you know, just to survive. Anyway.
I got to admit though,
men.
I do kind of love it. Otherwise, I wouldn't do it. So I guess there's that
fair enough.
sort of yeah. But you're right. I often tweet that out actually as a little sort of comment that, you know, everyday people shouldn't have to have a degree in finance in order to beat inflation. You know, and that's what a lot of people.
There it is.
You know, have to do. Yeah, exactly. And so I guess just to wrap all that up.
Sorry.
No, you're right. So this delay's probably causing a little bit of you grief, but I guess just to wrap all that up, I got to this point whereby I realised that there was nothing to buy in as far as value investing is concerned, and I came to the quick realisation that the money was broken, and that input is so critical when you're valuing other assets in order to try and, you know, like I said, try and beat inflation, and the input is the interest rate. Exactly, and when they're suppressing interest rates, that's where I tore the lid off how money works. Because you know, I thought my spreadsheets were broken. There was nothing to buy, and I thought I've done something wrong here. But what was really wrong was the input into that formula, and it's interest rates.
So, in simple terms, you're basically trying to, what sort of time horizon were you learning to invest with in mind?
Long term. I've always been
so
sort
retirement,
of
accumulating for retirement.
Definitely, yeah, and optionality.
Right, so when you say that you know, income streams.
Yeah, exactly. Just trying to increase cash flow, full stop, with a long-term sort of time horizon. Like at some stage through there as well, I was looking at my superannuation, going, geez, this isn't enough to retire on. Like doing all the calculations on where I was in life, accelerating that out, having an idea of where I wanted to be. I don't want to be working until I'm 67, but it was looking like that was going to be an inevitable. That was going to happen. So I was like, shit, you need to do something.
And so just to break it down again, so, I mean, a lot of people listening to this might understand what you mean without having it explained, but the input of interest rates being that you had a mortgage and you have other debts with interest rate and you can't invest to beat what they are likely to do. It's a good time to be talking about this after what's happened in the last year in most Western countries, right? You know, everyone just got carried away thinking that mortgages would be 2-3% forever. So it's probably relevant right now.
When you do a discount cash flow analysis, basically what that means is you're trying to value a stock and you're trying to say, okay, if BHP was trading for $45, what the hell does that actually mean, right? When you go and you value a business or you value anything or you value any other asset, what you're doing is a comparison rate between your quote-unquote risk-free rate of return. So if your risk-free rate of return is government bond interest rates, that's basically the yardstick by which you compare all other assets. So it makes sense if you can lend the government, say, let's use, say 5%. If you can lend the government money at 5%, and it's quote-unquote the risk-free rate of return, they can print it out of thin air and pay you back at any time. Theoretically, they won't default. So there's your risk-free. That's your bar. And then if you go out on the risk curve, so you want to go out into stocks, of a company, then it stands to reason that you're going to want a rate of return that's higher than the 5%. So you're always comparing against that risk-free rate of return. So when they suppress interest rates down towards zero, it has an inverse effect on the price you're willing to pay for all other assets, and they go to infinity. So as interest rates approach zero, stock valuations go to infinity, and that's the comparison rate and how that works. So when you're navigating investments, you're always comparing back to what do I get for taking on zero risk, which is arguable.
Yeah. It took a long time for me to join these dots, but in my head, the way I just think of it now, especially having been through 1 and a bit Bitcoin cycles of 4 years, the way I look at it in real simple terms is that when the government print money or create more money and chuck it out into the system, it basically bypasses those who don't own assets and ends up in the hands of those who do. And in real simple terms, like if we take the COVID example and everyone's stuck at home, or now rents are going up. I was just talking to my neighbour the other day, and he's a tradie, he's a plumber. Very similar situation. Family guy, got way ahead. They had about 5 years left on their mortgage, and he's just told me that they got told the other week it's now about 14. 14 years instead of 5. Like that's how much it messes with people's lives. And so in simple terms, the way I've been explaining it to people, because most of us don't get this, we don't sit down for 12 months with textbooks in our free time after work and study it. We just hoped God will be okay and whatever. But in simple terms, I've just been explaining it to people like, well, imagine you're him and you've done everything right. If your mortgage goes up because of interest rates, that extra $200 that you might have been investing or that you might have been spending on something else and being very sensible with is now the roof over your head. You've got no choice. It has to be paid. And so that extra 200 your mortgage goes up. It's basically going through you, through the person who had the asset to whoever owns the asset, which in this instance is the bank, right? It's just, it flows through. Currency flows. So when they produce more currency, it just flows where it wants to go. And they know where they want it to go. So it just goes back to them. So that might sound very conspiracy theory, but I didn't know any of this 2 or 3 years ago. Like, I'd always been good at making money, but I had no idea what it actually was or how it works or where it comes from. And so I think, for someone like you who's actually gone and studied it, but still couldn't make it work, it's like, well, who's winning? Oh, and then it becomes very clear who does.
Yeah, that's right. And to your point too about like conspiracy theories, like it doesn't even, it's actual fact that it happens, and it's just based on incentives and agendas. So like the people making these decisions, they're so close to the spigot of where that money gets injected that they don't see a problem. They don't know what it's like to earn wages and live pay to pay. They just simply don't. It's just they're that far removed from the reality that you can understand or I guess appreciate that from their rose-coloured glasses, there's no issue. The system's working perfectly.
Well, they don't get fired. They don't get help. Yeah. They don't get fired. They don't get
There's
held
no
to
accountability.
account. There's no consequence for their actions. If they're in government jobs and they're out of a job at the end of a term, they still walk away with an ongoing salary. Like, it's just not the real world, but they're supposed to represent the people of the real world. So I think the reason I'm saying conspiracy theory is the minute you start saying they and they're in control.
Yeah.
People can turn around and go, oh, you can't blame the government for your financial situation.
So
it's like, no. I'm well aware that there's the opportunity. I'm all for it. I'm a coach in that space. Like, go out there, create your own business. Like, I'm all for that. But the realization that we're all working with this money that even if you're doing really well for yourself, you're punished for it, essentially, by a system that just doesn't reward productivity or contribution to society. Of course, there's ways to get ahead. But it shouldn't involve.
And what's one of the
of textbooks
real
and
tragedies?
Your own money at risk to get ahead.
Yeah, exactly. It is crazy when you sort of look back at some of the things that people have to do, right, to try and keep abreast of this thing. But I think what's really tragic about this whole environment we're navigating right now, whereby we're going through a period of financial repression, which basically means that they'll hold interest rates below the rate of inflation to try and erode away the debt. and why that's why interest rates are starting to creep, because we do have high inflation, but they won't get above inflation. So interest rates, through this period, they can't afford for the interest rates to get above inflation. Otherwise, they don't get any benefit from the erosion of the debt through that inflationary mechanism. But what's really tragic, I think, is us wage earners are conditioned to the fact, conditioned to believe that our home is our most prized possession. And through these really tumultuous times whereby, interest rates are starting to rise and people are over-indebted, what's really tragic is that you will try and protect that home at all costs. So what ends up happening is you are trying to you'll erode your savings. Any excess cash flow that you have is eroded. Anything else you would have used to invest in other options is eroded, because you're just trying to keep that roof over your head, because we're so indebted. And you'll erode that savings, and by the time you may actually be forced to sell it, the market would have corrected as well. So it's a double-edged sword. So you've eroded all your savings just to try and keep it over your head, only to end up in a situation whereby you might actually have to sell that. And then by that stage, the lagging effect from peak interest rate, they think that there's around 12 to 18 month lag behind peak in interest rates to like max pain in those markets. So you might be able to survive that 12, 18 month, only to end up having to sell it anyway. And by that stage, the market's declined, so you haven't. So in my mind, and obviously, yeah, exactly. And not financial advice by any stretch of the imagination, but if I was in that position, I would try and sell that house as quick as possible. Obviously, you've got other issues then of high income, high rental markets and all that sort of stuff to battle, but at least then you've protected any savings or other investments you might have. You're selling out of the market at its highs, and
yeah.
exactly, and your principal place of residence you don't have to pay capital gain on, right? So you may be able to write it out. Is just a strategy to keep in mind and to think about, like, to each their own, and different priorities. And for me, for you ask my wife, that is the exact opposite of what she would do, right? Because she's very much more wants that safety net of having a roof over the head for the kids and all that sort of thing, which I get. I totally get it. So but it's it's just another example of being hard to navigate, for everyday people.
Why do you think it is? Like, I mean, you're around the same age as me, millennials, or just on the cusp of millennials and
Hanging on.
Gen X? No, yeah, whatever the one above us is.
I think I'm like one of the oldest millennials. So
yeah. Do you think it's just conditioning because it's what our parents did, and our parents were of a generation where interest rates made it worth owning a home, and they were, house prices hadn't got out of control because of inflation and because of government printing money. It's been happening for decades and for centuries. If you look back and you read the Bitcoin Standard and you go down the rabbit hole like we have. But do you think I think it's conditioning from our parents' generation, because for them it was the right move. For them it was doable. It was affordable. And so do you think it's just conditioning? Because Australia seems particularly obsessed with real estate.
So going sort of back to what I said earlier in this conversation around tradies getting paid well, that's only a condition of market conditions, right? So I think it's multifaceted. I think it's what you were saying about the parents. That's the environment they grew up in. But we've always encouraged housing as a means to save in this country, largely based on the fact that if we take away mining, the only other thing we really have is construction. We're sort of growing population over time, quite a small base, living quite coastal. I think there's a lot of inputs into that, and a lot of government policy has been shaped around housing. And for people to get ahead in this country, it was very, very typical for people to be able. People understand real estate. People don't understand equities. People don't understand how to value companies, but they understand number go up in real estate terms. And we were, benefited from sort of the 1980s through to the early 2000s of property prices doubling every 10 years. So it was a no-brainer, right? If you didn't do it, you were deemed silly, because it was so evident that those asset appreciation was going to keep going. And that's what the real tragic thing is around real estate is You talk to, or you go and have a look at Robert Kiyosaki, the author of Rich Dad, Poor Dad, one of the, quote unquote, most successful
Classics.
real estate
Yeah.
investors of all time. And he shakes his head at our policies. He shakes his head at that whole thought around negative gearing. He's like, your job is to increase cash flow. Celebrating negative cash flows is a crazy, crazy notion. Yet in this country, people think, and it's a real gap in knowledge as well. Like people think negative gearing is I get it back at tax time. It's like, no, it just reduces your taxable income. You're not getting dollar for dollar back at tax time if you've got negative gearing, and it's just the crazy celebrated notion of like reducing your cash flows over time to and hope and praying that your capital appreciation, your house price goes up in value over time. And since 2008, that just hasn't been the case.
No. And hoping that you don't need to suddenly liquidate any of that money quickly, because that's not necessarily, property is not liquid cash. But what you were saying as
That's
well about
really
Robert Kiyosaki, that was the book that, go on, liquidating.
I was going to say, yeah, it's a really good point as well. Through this period, we just spoke about that terminology, financial repression. So it's really tempting, right, to go and lever up. It's because your debt will get inflated away as well. Why interest rates are below the rate of inflation over time, your $400,000 mortgage on your investment property may not seem so bad if a loaf of bread's $1,000. Which is sort of the environment that we're trying to navigate through over the next couple of years. But the real problem, the real danger with having excess leverage in these environments is that it's going to be tumultuous in the interim. Like our underlying value of currency, you could argue is failing. And there's a really good book called When Money Dies, about the Weimar Republic and the hyperinflationary event, and you can see like the price of gold through that period of really high inflation was whipsawing around, and that's exactly what you've got to be worried about. Having too much leverage in this environment is your serviceability. So there's a recession looming. That means loss of jobs. So how confident are you that you are going to be able to service all of that debt? And mind you, the other really dangerous precedent that we saw through the COVID lockdowns with these rental moratoriums as well. So if there's really major financial duress, you will not be able to raise your rents. There's already, I know, property investor in Canada. They're limited to raising their rents to 2% a year while they're running through high interest rate environments. So it's really dangerous for the middle class because we try and get ahead. And then, it's very easy to wipe us out because we just don't have excess cash flows in order to be able to cover off all of that liability.
It was really interesting as well, going back to what you said about the Weimar Republic. I've tweeted and posted during COVID. I wrote an article about when Australia got real crazy. That was my awakening, I guess. I just started to, I was at the start of COVID, I was still doing videos on a YouTube channel for my affiliate marketing business and just doing content talking about stay at home. I was still very much do as you're told. And gradually you just started to question things. And I wrote an article about, I don't know what the answer is, but the mandates just didn't seem like it was not this. I don't know what the answer is, but it seems like not this, because on the ground, on the street, seeing people tearing each other apart was quite frightening and just wrong. It was just, I don't know what the answer is, but people rowing in the streets, it just got crazy. And I referenced Nazi Germany, which gets, a reaction. And I guess that's part of the reason to use it, because you need people to pay attention. But what people don't realize is that reference is not to do with the Holocaust. It's what was the environment, or what was the climate, the cultural climate leading up to a period where it was possible to get people to do such atrocious things to one another, right? And that's what frustrates the hell out of me. It's like people were financially struggling. People were desperate, and they were confused. And a couple of episodes ago, I was talking to a friend and coach of mine, Emma, who's, she's a woo energetics person, and she's phenomenal. But we're talking about something completely different. But she made the comment, when you put someone in a state of, it's the manipulation tactic. When you put someone in a state of confusion and offer them certainty, it works. And I feel like that's just, whether it's by design or just a slow thing that's happened over decades, people are so confused about money that they just go, I don't care. I surrender, which is exactly the words my neighbour used the other day about, he goes, I hate money. I hate the fact I have to think about it so much. And, they were 5 years away from clearing their mortgage. They're in their 40s, young family. Now it's 14 years. It's just wrong. And I think so many people do just get so confused and overwhelmed by it. They do just hand over responsibility and go, whatever. And so your Germany reference, I think it's just so important that we keep making those references, because it is jarring and it's controversial. But the point is, when people are put in a state where it becomes easier to just convince them it's okay to behave in a certain way, because that's the answer, when it's not good, it doesn't end well.
No, exactly. And I think that's when, some of these conspiracy theories start to take a little bit of hold, right? And people start to question, because it's man's search for meaning. It's another reference to Nazi Germany, right? It was written by Viktor Frankl, was the author of that book, and it's just a really good example of, like, people need meaning. People need to look for explanations, and when you see some of the controls that are coming down, or some of these policies that come down that inadvertently affect how you navigate the world and how you see value in this world, then you start to question, you start to go, why? And you uncover, you'll start looking under some rocks that you wish you never overturned, because the system is, there's issues. There's big issues.
Yeah. Which brings us on to Bitcoin. So when did you find Bitcoin? Because it's only when you've ripped off the lid, I think you said, or gone down the rabbit hole or looked under the rocks, and you're like, well, this is depressing. And that's probably why most people stop looking. But then you find out about this thing that actually offers such a ridiculous amount of hope and optimism. And that's what Bitcoin Live was about. You just walked into a room full of optimism, hope, enthusiasm, energy, all sorts of people, all sorts of opinions. Doesn't matter what you believe politically, religiously, doesn't matter. Money affects everyone. And it was just this energy. So how did you find Bitcoin? When did that happen?
So it was after the COVID shock, right? So the COVID lockdowns. I actually, being sort of plugged into macro and finance, I started to understand, like I was saying, understand the money input into those valuations. And then I had all these spreadsheets, and I had like something out of that ASX 200. I had 3 stocks on my list out of all of that deemed were quote unquote fair value, right? But they had distressed balance sheets. And then the COVID, we had a 40% drawdown in the ASX in the stock market, and after a 40% drawdown, I'm rubbing my little hands together because I'm sitting on some excess cash. I'm like, yes, here's my opportunity. Here's my Buffett. Here's my Buffett opportunity to swoop in. Yeah. And there was 6 stocks instead of 3 after a 40% drawdown, and I was going, there's something fundamentally wrong here. And that's really where I started looking at macro and how money works and the money history. And so I was listening to a lot of Preston Pish from his value investing podcast, going back through their back catalogue, and that's where I stumbled across Bitcoin. So I'm like, the money's breaking. Became probably a bit of a gold bug, really. Started like, and this was all very quick, mind you. So I'm a bit of a vivacious reader. So once I sort of get on a topic, I absolutely devour books when I'm motivated. And so quickly went from gold bug to why did gold fail to holy shit, there's Bitcoin, maybe I need to own some of this. Then the inevitable shitcoinery that goes along with Bitcoin, you're like, what if I'm wrong? Maybe I should diversify. What if Bitcoin's not the only thing? And then coming full circle. So it was only then later on when I started trying to teach my friends and family and writing articles because I had many, many, many conversations about what I'd discovered, what I was learning, how the money works, all of these
We've all
things.
been there.
And then I thought,
why don't you all
yeah.
understand?
So instead of sounding like a broken record, I thought I'd write it down, and then I've got a reference for my thoughts around why. And then I was just starting to loop Bitcoin in as a option for people to consider as a portion of their portfolio, very much from just the respect that you don't need a big allocation to protect everything else that you might have going on, 1 or 2%, and then quickly finding that once you do start to understand it, really start learning about it and trying to poke holes in it. So I tried to break it, right? So being an engineer and technically minded and having a little bit of experience with, I wouldn't say I understand the code necessarily, but I do know enough about programming and electronics and so forth to really start trying to say, okay, where does this thing fail? And realizing I couldn't break it, where I'm like, holy shit, what have we stumbled upon here, right? And then by the same token, I couldn't say the same for the other shitcoins. So I was trying to write an article and I was trying to tell people why I owned Ethereum. And I couldn't say the same things. I couldn't say anything about the scarcity. I couldn't say anything about the decentralization or the protocol
As
or the
money.
the rope as money, exactly. And then that's when I went basically Bitcoin maxi and just got rid of all my shitcoins, and went all in on Bitcoin.
And again, you kind of have to go through that, I think, or some people have to go through it if they get, the money goggles go on and you get greedy. It's human. And I've stopped trying to stop people doing that, because it's like you almost have to, everyone needs to go through some degree of pain to fully appreciate it, as long as it doesn't completely put them off. And that's the frustrating thing about a lot of this stuff. I think so many people are put off for life, because of a bad experience. The people that introduced me to some shitcoinery to start with, but I'm grateful because it's what got me into Bitcoin. I haven't touched it since 2017. I'm just like, oh,
awesome.
I mean, they're very successful. They're fine, but it's sad, but to change tack a bit I've actually thought you'd been in Bitcoin a lot longer than that. To change tack a bit,
newbie.
One of the big questions that always comes up, which I want to talk to you about, because you are a Sparky, or you work for an energy company. It's a government-owned entity, and when we first spoke, and this is me being a bit selfish and leveraging everything I believe about being you and getting paid, especially because you're someone who chose to change career and try something new in order to make more money, and it's not quite gone how you would have thought, but thankfully you found Bitcoin, so you'll be fine. When we spoke the first time, I was like, why aren't you just waxing lyrical about Bitcoin to everyone you work for and getting them to mine it and use the grid? And I don't even know how the grid works. And because the average person will just question, they've got all the FUD and all the mainstream media narratives in their head about Bitcoin uses lots of energy. Well, yes. And that's bad. Why? Because I couldn't have told you 2 years ago how the energy in my house works. I don't think most people could. We just take it for granted. So tell me, break down in simple terms how the grid works. And it was funny, just before I got on with you, I saw an Alex Epstein video. For anyone who doesn't know who he is, look up his book, Fossil Future. And his little clip on Instagram, he was on Fox News, was saying how the government have had us under the control of the grid, as in we are forced to use the grid. So tell us how the grid works and your role in it and what you do. And then I'm going to bully you into telling your bosses to mine Bitcoin from it.
Well, yeah, so there's a bit to unpack there, but grids. So generally how grids work is you have generational assets dispersed geographically across a state. So for us in Australia, our whole eastern sort of seaboard is connected with transmission. We have a variety of different generational assets. So typically most of our base load power comes from coal in this country. We also have gas, and then obviously we have other assets which are obviously beginning to proliferate in the renewable space, like wind, solar, hydro. So they will be spread out
Rich
everywhere.
country.
We are. We're really lucky, and we're probably one of the only countries that will actually be able to pull off a net zero approach with 100% renewables without nuclear. So nuclear is not a power generational asset in this country. It's not even on the table for discussion in this country, much to my dismay, because I believe there's a bit in that, but I won't get sidetracked on that topic just yet. And so the problem is with generation is you need to get that to your consumer, and how you get that to the consumer is via a grid. So you have a couple of different levels on the grid. One is transmission. So transmission is really high voltage. So the problem with transporting electrons to people who use them is that electrons flowing through a conductor, a conducting medium, so typically your poles and wires, your wires through the air, if you have a lot of current, that generates a lot of heat and there's a lot of waste. So what you need to do is boost the voltage. So power is directly proportional to voltage and current. So if you can change any one of those two parameters, if you have really high current, you have really high heat. If you can lower your current, you need to boost your volts because they're directly proportional. So you boost your volts really, really high, and then it allows you to transmit that power really long distances, minimizing your loss because you're lowering your current, doesn't generate as much heat. It's quicker. So you do that through substations. So what you do is you would generate at a certain voltage and then use a substation, big transformers. So they're your big yards that you see, you drive past, you see all the towers coming in, you've got big pieces of plant within those compounds. So those power transformers will step that voltage up. We jump onto the poles and wires and we transport that where that needs to go. And then we will step down into major centres. So you will have bulk supply transmission lines going all up the coast. And I'll use Cairns as an example. That's where I'm from. So we've got a couple of different bulk supply points. These transmission lines come into bulk supply. And these are really key critical pieces of infrastructure. They're substations. And then we step that down to a distribution level of voltage. So we step that typically down from 275,000 volts. So your socket in your house is, you definitely don't want to touch that. So it's either 275 or 132. That's right. Cooks you pretty good. 132,000 volts is also typical for transmission. And then we step that down to sub-transmission. And then we disperse that out. And we've got lots of little substations in all around your town. And they're typically at 66 or 33 kilovolts. So 66,000 volts. And then we step that down again to distribution type network. So that's in Queensland's typically 22,000 or 11,000 volts. And that's what you see on your normal wooden poles and wires that go through your neighbourhoods and so forth. We do it underground or we do it above ground. And then at each sort of location, and you could pretty much just call this every street, for example, we'll step that down again. You'll have a pole mounted transformer or those big green boxes called pad mount transformers. And that's stepping the voltage down from 22,000 volts down to 240, 415. And 240 is what goes into your house.
Yeah, exactly.
Yeah.
I did,
so that's your grid.
A lot there. I did not know a lot of that. I think a lot of people wouldn't have known that. And this podcast is all about the things we don't learn at school. I will be telling children, if I happen to be with any children, do you know what they do? That's what it does. Now I feel like I've learned something fantastic. But the big thing being, along that massive process, there is an oversupply or a certain amount of wasted power, right? Which people don't realise. Yeah,
definitely. There's a lot of inputs. Are you specifically sort of leading to where Bitcoin mining fits into grids and grid forming?
Mm-hmm. Yeah, exactly.
Okay, so I'll use renewables as an example. So when we have increase in renewables, and most global governments are pushing towards trying to increase their use of renewables, so wind and solar. The problem with both of those technologies is they're really unreliable as far as they're non-consistent. So Queensland Energy Jobs Plan is a great example to sort of demonstrate. They want to go completely, their end goal is to go net zero, right? So let's have a look at what that looks like. Mm-hmm. So if your wind generation is 30% efficient at best, that's a fact. You can look that up. 30% capacity efficiency at best for wind, and about 19. is usable. Yeah. And 19%
Yeah.
for solar. So if your maximum demand, and a maximum demand is a term that we use in the industry to determine everyone gets home and they all flick their lights on, they're all cooking dinner. What is the grid demand? What is everybody drawing at the same time? So if your maximum demand
What
is
do we
here
need?
and we need a grid that's 3 times the size. If we're going to go completely renewables, and we'll ignore hydro for now and battery storage, but we just talk wind and solar, we'll need a grid that's at least 3 times the size of the capacity in order to be able to
Yes.
to deal with that.
Keep everyone on.
If wind's at 30%,
Yeah.
keep everyone on without rolling blackouts. So the question then lies: what about when the conditions are healthy? So there's your maximum demand. So we have to build our grid to at that level. So what happens when everything's nice and healthy? The wind's blowing, the sun's shining, and we've got all that excess capacity. Who's paying for that excess capacity to build out those grids and capitalize those infrastructure at such a massive scale? The answer is the energy or taxpayers,
The
because we're going to
government.
offset all those costs.
That's right.
The government,
The
exactly.
government pay for it.
The government,
Who pays them?
yeah.
Yeah.
That's right. So one really big use case is for Bitcoin miners to come in and there's our maximum demand, here's our capacity, and we can soak up all of that excess capacity when sun's shining and winds are blowing
Waste.
really, really well. Yeah.
Yeah.
And then, we can monetize and that excess that excess energy. And then what happens if a big massive storm blows in and all that solar gets dropped off? Then we just send a signal to the Bitcoin miners to ramp down, and they will basically just drop off the network. And now, our capacity, our excess capacity is within limits of our maximum demand, and we avoid that rolling blackout. The other
Yeah.
really big use case is when we don't go 100% renewable, for example, but we've still got base load supply. So these coal generators and these generators that we use to form up the grid from a base level, Texas is a good example of this, they need a minimum amount of load in order to run. So if you've got a whole heap of generators running in parallel, if you don't give them enough load, they actually bog down, and it's actually really dangerous for the plant over the life cycle of the plant. So if you're building out excess renewables on top of this grid, you're putting pressure. You're putting less pressure on those generators in order to run, but you still want them to run because you still need that nice safe base load. We don't have 3 times the grid, right? So we've only got, but we're putting more and more infrastructure onto that. So there's another use case for them to go and soak up and take that excess demand when times are good, and then give it back to the grid essentially to say, okay, I've been using this, but now guys can borrow it, and that's a massive use case for shoring up the grid, and that's what's happening in Texas with ERCOT. They've got excess renewables, they're starting to put more in, but they're still reliant on that base load supply. So they need to make sure that they've got enough generators running to cater for the worst case scenarios. And that's where they're using Bitcoin mining to soak up that excess capacity.
And I think for anyone who's not into Bitcoin, doesn't understand it, isn't interested, or hasn't yet learned, why is it, the thing that's starting to really blow my mind is the crossover, which Michael Saylor talks about a lot, how Bitcoin as money crosses the physics and energy conversation. Like it's literally turning energy into money, which is what humans do every day when they're working for a fixed income or for a salary or for a wage. You're turning your energy into money, but it's not working because the money you are exchanging that energy for is broken. So that's when those pennies started to drop for me. I was just like mind blown. This thing, if you talk about, as you were talking about the surplus of energy that isn't being used. There's a lot of people out there who point fingers at the government or point fingers at the rich and say tax the rich because they've got this big surplus of money. They should just give it to less wealthy or underprivileged people. The billionaires should just give their surplus of money away. And it's like, if that's your level of thinking, fine, whether you agree with it or not. Well, I don't agree with that level of thinking, or that way of thinking. But if you have the ability to think a surplus is wrong, listen to Daz. Listen to what he's saying about how the energy to your house is supplied and why it's expensive at the moment because you're dependent on this grid that is completely inefficient. Completely.
Yeah, and
There's
so
so
there's a
much
really,
waste,
really good
and
point
yet there is so much waste, and people are paying more for what they use. It just doesn't make sense.
yeah, and there's probably something I should double back on, which I didn't explain in the first pass with that, which is a really good point you brought up. When you want to turn your light on at home and you want to put your stove on, there has to be generational capacity at the ready, already on. It's not at the generator end.
Whether
We
you
don't
choose
just
to or not.
flick on a switch.
Yeah.
Yeah, exactly. So we've got to have that spare capacity in the grid in order for you to be able to enable that maximum demand. So when everyone wants to turn on at the same time, we have to have those generators running. We have to have that spare capacity in the system in order to be able to provide those electrons for you. We can't invent them out of thin air. And that's really where I guess there's so much excess capacity and so much waste in that system when it's not being used efficiently. That's really where Bitcoin is coming to the fore, with being able to directly monetize that excess capacity in a monetary good. And it's tying the physical and the digital realm together. The only way you can make that transfer between the physical and the digital realm is through energy transfer and energy usage. And energy usage, you know, there's so many of these sort of woke agendas around, you know, using energy as wasteful, but there's a very high direct correlation between human flourishing and energy use. We should be looking to increase our energy use at every opportunity. And Bitcoin mining is the input to make that happen, particularly in these developing countries. Like, it is so asinine, such a tragedy for us to be dictating to those developing nations that, you know, we've had decades worth of excess energy, and you know, we've been chewing fossil fuels, and we've flourished, you know, as a result of that, and we have the hide to, you know, deny them those same opportunities purely because some, you know, some studies indicate a correlation between carbon and temperatures, which you know, has been, I've seen enough evidence to really question that as well. So it's all about these narratives and the agendas, and energy is such a game changer.
Yeah, and money is, and we're probably starting to get into a conversation that you just can't possibly appreciate if you haven't learn about how money works. I'm trying to touch on little bits as much as possible in every conversation to try and join the dots, but you can't do it in an hour. You can't do it in 2 hours. It's, you know, I'm just hoping this podcast inspires enough of a curiosity for people to go, I kind of get what you're saying. I'll go and read a book and figure out the rest. Or because everyone will get it differently. It's like advertising, you know, you've got to hear it 7 times or whatever before it actually sinks in. But I just think that energy conversation, especially from a tradie who's a family man, who, you know, who just gets it. You just get it. The energy conversation in a way that when we were talking the first time, I was just like, this is so dumb. And you know, Bitcoin, like, and I think I said to you, why aren't you telling all your bosses about it? And you were like, well, I can't. It's the government, it's sensitive. But I feel like, I hope, you know, from especially since going to Bitcoin Alive, and just the more you talk to other people, you're like, this is not dangerous to talk about. This is just sensible. You know, why are people around the world suddenly struggling to pay their bills when we're literally wasting energy? And I think Saifedean talks about it in the Bitcoin Standard, about the history of price controls, which is essentially what's happening. You know, there's in the chapter, I don't know what era it was, don't ask me, but all throughout history, when governments get involved in markets and manipulating, you have situations where farmers are producing too much, but they have to burn it and waste it, because if they put too much of it into the market, it'll bring the price down. It'll be cheaper for people. Can't have that. It's just this stuff is just so dumb when you start to see it for what it is.
And it is all related, right? So as humans, you know, expending our time and energy for wages, it's you know, money is supposed to be a store of energy. It's a store of your time.
Yeah.
You know, money is time plus energy, and as humans, money is it's a fundamental way of communicating value between each other. And when somebody is pressing on that string, when somebody's inputting and manipulating that for whatever reason, economic stimulus or monetary policy or whatever you want to call it, at the end of the day, they're manipulating how we as humans interact. And that is, it's got profound effects on everything from society to wokeness to, to the bond between parents and children and war. Exactly. There are there's so many things downstream of money that it's mind blowing, and that's what I really we alluded to this earlier in the convo. Like, Bitcoin is hope, and it really fucking is. Like, it's when you start to understand the downstream effects of the fuckery that goes on with money, it is diabolical. It is completely it just erodes it erodes the human condition, and that's why. We sound evangelical, but when you fix the money, you can literally fix the world. And when you start to realize that, and we, like the Bitcoin Alive conference in Sydney it was optimism. It was a celebration of hope and love and, just good people who genuinely want to fix the world. And it's one of these crazy things where I've never experienced that sense of optimism. And we've got the smartest people I've come across in the last decade are Bitcoiners. Like, and they don't have to be famous or, these influencers or anything like that. It's just general conversation for people. You go, you know what? You fucking get it, mate. You know what's going on. You know what's wrong with the fundamentals, and we know how to fix it. And it is hope, and we're going to do it. It's only a matter of time. It's inevitable.
And they're not,
so you're either you get on the bus and benefit from it yourself, or step aside,
Yeah. And it's not that these people are the smartest people because they're Bitcoiners. Bitcoin's only 13, 14 years old. These people are the smartest people because they are engineers. The original, the cypherpunks, they're techie nerds. But now you've got people from all walks of life, myself included. I'm like, this is why people are unhappy. I care about happiness. I'm a coach who does stuff based on data about people's happiness. Like, it's not okay. And like you say, everything is downstream of money. If individuals are struggling, their families are struggling, their relationships are struggling, you have that with 8 billion people, society breaks down, we're at war. Like, it is. Everything is downstream of broken money. And that's probably a perfect place to start to wrap up, because you said that you've written everything down that you learned on your journey. People can find that at Looking Glass. I will link it. So Dan,
most of those articles
shared all his knowledge for free, which I'm dead against.
Yep.
I think everyone should be paying Daz for his stuff, and we'll be continuing to talk about that so that you do somehow make some money out of it, because it's unreal, that website. There's so much on there. LookingGlassEducation.com. I'll link it.
Yep.
But just to wrap up, I always ask people a couple of questions. Obviously, the title of this podcast is Be You Get Paid. What advice would you give your younger self at any age on those two things? So what advice would you give yourself about being you? And what advice would you give yourself, your younger self, about money? Pick an age, any age.
Okay, be you. So I would definitely have started gigging
all your kids
for myself. A lot younger age. I would have just done that, because that's gigging's a great side hustle. If you have a talent like singing or being able to play guitar and stuff, it's a great way of earning a side income. I wish I had started earlier, and it feels good, makes people happy. And what's better than earning a decent side hustle wage while making people happy? Putting a smile on their face. So I would say do that.
Maybe a full-time income.
And exactly. And that's one of those things. I think, like, for gigging in particular, I wouldn't do it full time, because it then becomes a job. So if you can pick your hours, pick your time, and do that as a balance, then I've kept the joy. So I've definitely overdone that over the years, and now I'm comfy. I do one a fortnight or one wherever I'm sort of inspired to do more, and that's a good balance for me. That's really good. Yeah. And in terms of money, I'd be less inclined to say save, because it didn't work. While we lived through, and I would argue, inflation's always been higher than interest rates over the last decades, right? And it was always sort of ingrained in me, you got to save, you got to save, you got to save. But putting it in the bank did absolutely zero for me over the last sort of 20 years. So I would have said you need to learn how to invest earlier. And taken that pretty seriously. But again, this is why I think Bitcoin is hope, because it's actually giving power back to wage earners. You don't have to have a finance degree to understand money, understand Bitcoin. You can start saving in Bitcoin, and that is your savings account. Like if you do it and you iron out the volatility, you learn how to DCA, dollar cost average into your investment. You take small chunks at it. It can be a small amount that you're not going to miss, and you know, it's putting the power back into wage earners. You don't need to know how to read the real estate market or the equity market or anything like that. You just need to dollar cost average into Bitcoin, come back in 4 years' time, see what it's doing.
Good advice. And that's for our generation. I always just like to add on to that. How great would it be if money just worked? I would love to get to a point. I don't think it's going to happen in our lifetime, but I hope I'm wrong. We shouldn't have to even talk about money. It should just work. Like we should be able to use a form of money that $1 is $1 forever. So that if you want to save, you can save. And that's your personal goal because you're saving for whatever. Maybe you want to buy a house when you retire, or you want to not save and you want to invest. Whatever you want to do, the money should allow you to do that. And I think I always just like to paint the picture of the Thomas Stroh movie that I've shared a few times, where, you know, this utopian world where people can do what they want to do to contribute to society and enjoy it and not be in something they hate because that's the only way they're going to earn enough money. But for where we're at right now, in hopefully what is a transition to that world, yes, dollar cost average into Bitcoin.
Well, we're in a deflationary world. Yeah, for sure. We're in a deflationary world. Technology is inherently deflationary, and we need a deflationary currency. So we should be, as humans, by this stage, we should be working less, and we should be able to store our wealth in a very easy to understand asset that will increase in purchasing power over time to navigate that deflationary world where you make nice, sound economic valuations around what you choose to spend your money on. And that will enable human flourishing through enabling us to be able to do whatever the fuck we want to do. If your passion is art, you should be able to earn a living from art. People will find value in your art and they'll pay you for art. Right now, you can't make money in art unless you're the absolute elite end of that scale. You know, same with gigging. I'd love to be able to earn a living from gigging, but like I was saying, in order for me to do that, I would have to be doing it 7 days a week in order just to get by. And it shouldn't be like that. I should be able to, you know, do enough out of my music to be able to flourish and survive without having to make it such a big ordeal that it becomes a chore. So I think, you know, if we embrace a deflationary world, embrace a deflationary currency, ultimately our world will be a beautiful, beautiful place.
Oh, what a place to finish. I'm just going to finish there. Done. Price of Tomorrow, Jeff Booth, you've pretty much just articulated that whole book in a couple of rants. So well done, you. Thank you so much. I will link all your handles and stuff and people can find you.
Cool, mate.
When they're on Twitter.
Hope I didn't go into any rant.